It's a very interesting question. If you look at the 6 months that have gone by and the 6 months that we see on the horizon as we sit here in December 2014, I would say that the oil markets at the present moment is suffering from geopolitical fatigue. Why I say that is that if you look at the wider risk dynamic and you look at the last 5 years, we keep hearing these sort of geopolitical flare-ups. There is trouble in Nigeria, there is trouble in Libya, there's trouble in Iraq, and all of this factors into the price of oil, especially Brent, and you will have a lot of market analysts, a lot of commentators saying, well, there is a risk premium, and that risk premium at any point in the trading cycle could be as high as $10 to $12 per barrel. And that has been ingrained into our psyche. We keep hearing this repeatedly. There's a risk premium, there is a risk premium, there's a geopolitical premium. And it factors into almost about a tenth the price. At this point in time, where the supply is very healthy, in fact there is a supply glut, what we are saying is that the geopolitics has been neutralized. It's as if the market has woken up and it feels that we have got risk fatigue. Now, look at the wider world. There is still trouble in Nigeria, there is still trouble in Iraq, there is still trouble in Syria, there are various flashpoints, yet it is not having any bearing in sort of supporting the oil price. The oil price is still declining. There is a war on in the Middle East and the oil price is declining. And the sole reason for that is that the market is at the present moment in time suffering from risk fatigue.
What are your thoughts? I don't know if I can't remember if this was in. What are your thoughts on the troubles in the Middle East and how these could impact the oil price?
Sure. Interesting times. The trouble is still brewing in the Middle East. We look at Iraq, we look at Syria, we look at Yemen, we look at the wider sort of dynamic in the region. Conventionally, any flare-up, however minor, however major, will always have a bearing. You will see an uptick in the oil price. The reason it's not happening right now is the good old supply side answer to it. Plenty of oil out there. So what's happening is that given that there is so much crude in the market, it is neutralizing the geopolitical impact of the Middle Eastern crises that we've had in recent times. And of course, if you go back historically, the way I see it is it has always had a historical bearing, but this time around, I think the market's just about had enough.
Interesting, you didn't mention Israel. It's funny how everybody thinks that Israel is the problem.
But look, there was, if you want to recall, if you include the Israelis in the dynamic, there was a very strong rumor at one point in time I would say not one point, but various points in time in 2013, where the Israelis almost openly said that they will attack Iranian nuclear sites. But that has also been partially neutralized. Israel has calmed down a bit. There are internal political struggles in Tel Aviv, so they need to look at their own backyard first, and there are fresh elections on the horizon. That said, the threat of Israel attacking Iran has receded considerably, and Iran is attempting a re-entry into the global dynamic via the nuclear negotiations, ironically in Vienna, where OPEC also meets. So yes, it matters, but again, that is also not really having a tangible impact at this point in time.